Oil prices rose slightly in the early trade, with the quote settling near the 6-week lows. Market sentiment is supported by the overall trade optimism ahead of the signing of the Phase 1 trade agreement. Washington stripped away its designation of China as a currency manipulator, although it was previously assumed that this step would be taken after the signing of an interim trade agreement. On Monday, oil finished the trade in the red. Early in today's session, the oil prices were slightly higher, driven by prevailing market optimism. However, the bulls are struggling to hold their ground as oil is trading mixed near its lowest levels. Brent is currently trading at just above $64 per barrel, while WTI has settled at $57.84 a barrel, lower than during yesterday's close. Market participants are again concerned with the possibility of oversupply in the oil market. According to the forecast of China's largest oil and gas company, CNPC, this year the oil demand in the country may turn out to be 2 times lower despite the improved trade relations with the United States. Besides, Saudi Arabia's energy minister said that it was still too early to talk about the extension of the OPEC Plus deal on production cuts. These factors continue weighing on the oil quotes. Today, traders will look ahead to the preliminary crude inventories report in the US. No significant changes are expected in the oil stockpiles, so this data is unlikely to influence the trade. Investors will most probably focus on the news from the trade front. The ruble has lost ground due to the interventions from the Bank of Russia. The dollar-ruble pair started the session trading higher at 61.38. The Russian currency has lost 0.4% against the US dollar. In general, the ruble's reaction to the massive purchases of the foreign currencies may be considered a short-term internal trend. Meanwhile, external background is rather beneficial for the ruble. Thus, global financial markets remain optimistic ahead of the upcoming signing of the Phase 1 trade deal and the strong data on exports from China. Today, investors will keep an eye on the announcement from the Russian Ministry of Finance regarding the details of the domestic government bonds auctions. Later in the day, the dollar-ruble pair may be affected by the US consumer inflation data for December. That is all for now. Thank you for watching and have a great trading day.